Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be looking at key milestones. Obviously, the price of Bitcoin is bleeding once again. At the time of this video, we're just below $55,000. So let's dive into some key milestones and see what's going on with Bitcoin. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So, Bitcoin the other day, put in this local low of around 53.6K, somewhere in that area. On some exchanges, I know it went a little bit lower. Some places it went a little bit, it was a little bit higher. But more or less, we can also note that we had a bounce, more or less, off the 100-day moving average, right, give or take, which is not that unsimilar, right? It's not that unsimilar to what we saw happen over here. And interestingly, we had a bounce back up and then right back down to the 100-day again before getting some momentum back. We are back down to that 100-day moving average. Now, this type of analysis is not something you can take to the bank. And the reason is because, of course, we could always go back down and test the 20-week SMA, which also happened to correspond to the 100-day moving average back over here. But today, the 20-week SMA is actually much lower. It's much lower than the 100-day SMA. As you can see, the 20-week SMA is currently at around 52K. The 21-week EMA is at 53K. All right. So in the event of a pullback below the 100-day moving average, which, by the way, currently is at 54.5K. All right. So which we just had one wick to, right? We just had a wick to the 100-day moving average. So in the event of a pullback below it, right, below 54.5, then ideally speaking, we would like to see Bitcoin hold the line at the bull market support band. Okay, this is where we would like to see us hold the line. We held the line here, not too long ago. Hopefully we can hold the line again. But again, a lot of people are saying, well, we're going to bounce off the 100-day. It's certainly possible, right? It's certainly possible. We saw us bounce off of this area in the past. Now, something I thought is somewhat interesting. We followed this pattern for a while now, so we might as well pull it up, considering it actually acted as a fairly good guide for the entirety of this move, right? If you put this bottom right here, you can see that we actually tracked it relatively well. Now, this is also not something you can take to the bank. I do not envision, this pattern just continuing to play out over and over and over again. But at the same time, we could at least say it actually worked out relatively well last time. And what's interesting is if you shift this over to this bottom here, so we can put it here, which is where the bounce occurred, because that's where the bounce occurred over here. But on this one, the local bottom actually occurred a few days earlier. And then again, if you shift it to that point, you essentially get the top more or less within the same plus or minus 1 days. Albeit at a slightly diminished rate, of course, because if we had followed the move from 29 to 53K, that would have implied Bitcoin going up to over 70K, which we did not make it to. But it would also call for some type of a bounce around that region. So, I think that obviously the most optimistic view would be to just bounce here off the 100-day moving average, right? On this logarithmic trend line. Okay, this would be the most optimistic view. A bounce at this level, not necessarily going up to these levels, because again, this move was a diminished version of this one. Therefore, if we did get another impulsive move, I would probably speculate, unless we go parabolic, of course, but I would speculate that it would probably be a diminished version, again, of this one anyways. But again, that would be the most optimistic viewpoint, okay? The other way to look at it, where we're still relatively bullish, of course, is instead of looking at this on a log scale, we could go look at this on a linear scale and note the confluence, I guess if you want to call it that, between this imaginary line through the wicks, right, which are these daily moving averages, and the bull market support band. Okay, so you could argue that there, even if we were to go back down to 52 or 53K, we're still doing relatively well, right? We're still doing relatively well. So that's what I'm sort of looking for. I mean, I know a lot of people are somewhat worried right now about what Bitcoin's doing. If we go look over at the short-term bubble risk, we didn't, fortunately, we didn't really get that too far extended, okay? Which, as I'll remind you, is actually very similar to a lot of what happened in this phase of 2017, and even up here as well, but it did get slightly more extended. So that's currently where we are today. Over back in April, we got a lot further extended, and therefore we ended up having a pretty catastrophic drop below the bull market support band. This time, we haven't really gone up that much, okay? So we'll see if we can hold it, right? If we go back down to the bull market support band, obviously we'd like to hold it in the event of a drop to those levels. Also, do remember that if we go back down to those levels, it never feels like you're gonna hold it until hindsight later, if in fact we do. I mean, there's obviously no guarantees, but back in September, it didn't really feel like we were gonna hold it. But we kept saying, look, it never feels like you're gonna hold it, and then a lot of times we do. So I'd say the short-term bubble risk, at least in terms of the extension from the 20-week, doesn't really look that bad. At least we didn't get too far extended here. It's not like we got, some like 100% extended from the 20-week moving average, nothing even close to it. So let's see if we can either hold the line at the 100-day or the 20-week SMA, right? That's what we're looking for. The 21-week EMA we know is at 53K. The 20-week SMA is at 52K. The 100-day is at 54.5K. So we're coming into a lot of support at these levels. And a lot of people have asked me, well, if it drops below the bull market support band, how would you feel about the market, right? How would I think about the market at that point? Well, there have been instances in the past where we dropped below the bull market support band, had a weekly close below it, and then just got back above it, the following week. And again, you really shouldn't take my word for it. Just go find it yourself, right? You can see here in 2013, we have an example of that. So even if that were to happen, we still have a chance to get back above it. And also note, too, that the 50-week is moving higher. And the 50-week is where we typically find bounces off of after some nice rallies. We bounced off of here back in July. That one is also, sort of coming to the rescue as well. That one's already at 47K, and it's only continuing to move higher here in the short term. So I know a lot of people are scared. I know a lot of people are really worried about the markets right now. Obviously, the stock market is down today as well. But I would argue, I think the general retort to that would be, look, we're still above right now. We're still above a lot of these major support levels. We saw a bounce off of these levels, not too long ago. The bull market support band usually provides a lot of support during our bull run, our market cycle. It usually provides a lot of support, and we still have some wiggle room to get back down to those levels. And, if we were to go back below the 20-week, I would hope the 50-week would hold as support. Because if we go below 40K, then I suppose you could argue at that point that structurally things don't look really that great. But right now, my outlook on the market is I'm still fairly optimistic. I think that, look, we're going to have phases like this. We notice that the second leg to a market cycle could emulate 2017 in the same way that the first leg of the cycle emulated 2013. This move, maybe the second leg will actually emulate something like 2017, where we get systematic tests of that bull market support band. And you can notice that we actually already did come back down to the bull market support band last week, within 1%, right? We came within 1% of it on that wick. So 52 to 53K is the area we would like to bounce from if the 100-day moving average does not hold at 54.5, which is more or less where we are right now. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. Also check out the Telegram channel, which you can find a link to in the description below. Make sure you click the bell icon to turn on notifications, and I will see you next time. Bye.